Hello, everyone. Hope you had a wonderful trading week and an awesome weekend. Let's just go ahead and jump into it as usual, starting off with the dollar on the weekly time frame view. And again, as I said last week, we were looking at dollar pushing down. We ended up pushing down as expected and end up coming up a little bit towards the end of the week to try to fill a gap here due to the pound basically putting the downward pressure on the dollar index. So again, let's just go ahead and just drop down to our daily time frame view here. And this is an old annotation that I have neglected to remove, so I'll go ahead and do so now. And here is that gap down and then the retracement as follows to the upside. Looking for a little bit more here to the upside around 97.25, 26 area as possible, as we do have a little bit of resistance basically at the break here. So that's basically what we're looking to complete. And then we'll be looking for another retest of those lows with a again, continuation of that downward move as I indicated on our weekly time frame view. Back down lower here, and again, this is pushed out a little bit just so we could see what exactly we're looking at for all of you at least. Looking at a further push down to test the next fib level around 90, 95, 95, around 96, let's call it even, and then another retest of that 97 level, followed by further continuation to the downside in the coming weeks as we are now looking at dollar getting liquidated to the downside. So again, we'll see. It's going to be kind of choppy here as this week progresses, and then we'll see if we can get that break under the lows here. 96.75 turns into a test of the 96 level as a whole. Moving along to gold, which had again another volatile week on the back of many volatile and disruptive headlines this past week regarding trade. And we did, in fact, have a nice green candle put in this past week here. As I indicated, we were looking at a push back up here. And we did get that move to the upside. We closed at around that 1480 level, which again is quite crucial. Again, we'll be looking at some chopping area here for gold as we continue to try to grind our way to the upside here. Still getting a little bit of pressure from the dollar yen. And again, as I referenced in previous videos that I put out to all of you, make sure you're watching dollar yen if you want to know direction of indices as well as gold. So that all being said, we are looking at some more chop here. If we do get a nice foothold around that 1484 level, then there's an opportunity for us to see that move up into the 1495 and then plus from there. So that's the basic key level that I'm watching, is that 1484 level acting as support. That starts acting as support, that we can see that squeeze up to the 1495, 1496 level, just shy of that 1500 level, chopping around, and then we'll start to see that upside continuation into those 1540s. So still on track there as far as that's concerned. Again, gold still has a little bit more chopping, consolidation, and then we'll see that upside continuation move again. So 1484 holds as support. Then we'll be looking for 1495s, 1495 retest down, and then we'll see continuation move to the upside. So those are the levels that I'm watching personally. If we do fail to hold the 1480 level, as in near term from our close on Friday, we'll be looking at 1477, 1478 area to try to base and range within. So just looking at our daily time frame view to kind of go to a little bit lower here, and I'll just go ahead and just drag this out a little bit just to keep it uniform. Again, you can see we've been kind of putting in a lower low, putting in a little bit of a nice high here, higher low, a little bit of a higher high, just barely, higher low again, a little bit of a higher high, and again we pushed back down, and then we're trying to push back up again. So as you can see, it is trying to get itself going. This is kind of the pattern that we do see with gold. So we'll see if we can go ahead and hold on to like 14, I'm sorry, I stand corrected, around 1475. Otherwise we'll be again testing low, but putting in a higher low potentially around that 1468 level, and then trying to bounce back up again into those 1488s, 1490s. And again, the 1484 level is pretty crucial because that would establish a higher base level to jump from, and that would be that 1495 test here, which is the crucial point. Again, before we can get above that, we need to see that higher level of consolidation. So that's what I'll be looking for personally. So still pretty much range bound, as you can see, between the two levels, 1464 up till about that 1488 level. Nice move into the 1491 level, but again, it was short-lived and pushed down pretty aggressively, I would say. So as all of you that have been watching it have been, basically taken for a ride, hopefully you're using your stop losses to alleviate any pain in this volatile market as a whole, not just gold in general, that everything. Again, looking for higher base to be established. If we could hold at least 1475, I'm looking at 1480 as the nice benchmark for myself on my own personal charts and templates that I'm using. Hold that level, but looking for a nice push up into the 1488s again, chopping around here, and then once we establish that base around 1484ish, should be able to get into those 1495s and then start moving our way to the upside as I showed earlier. And as far as crude is concerned, again, I'm not sure if I mentioned it in my prior videos or not. Somebody will have to go back and check, let me know, because I'm not going to do it because I don't really have the time to do it in general. But I was looking at 60.50 as the upside peak of this overall move in general. We did end up getting that nice push to the upside here, running back up, and I'll just adjust this a little bit because I only adjust it when I'm doing my videos for all of you, at least on this template. Again, you can see had that mark around that 60.23 level. We pushed up in around 60.47, just shy of that 60.50 level, and again we saw that push coming down. Now, weekly time frame view does look pretty solid. It is kind of deceiving, I would say, in my opinion, because again, if you go ahead and if you're looking at the overall trend lines or the fibs, both kind of come together right at that level here. So that's that 50 fib level, and I'm just going to go ahead and drag this out at this time so we have that for next week's video. Again, I expected resistance at this level, and next level I'm looking at is a retest of the 59.50. That level folds, then we start testing lower and lower, and then ultimately I expect we'll be back in this 55 70, 55, 60 levels again. So I'm just going to go ahead and zoom in a little bit here, mark this as the high around the 60.45 level, and then looking for 59.50 as I said, but ultimately looking at a nice move down back into the 55.50s again. Nice, short, and sweet. Of course, the price action in that is not as short and sweet, but it is what it is. It is in a range. Find the range, and then you'll understand exactly where the breaks will occur. Natural gas, on the other hand, is looking kind of a little bit like it could go either way, in my opinion. In the near term, it's going to be kind of volatile. So there is a possibility that we could see a little bit more of a push up again at the 244 level. A slight possibility, I would say. I'm still bearish overall. I'm just giving it that potential to reach a little bit higher, to lure in some bulls before it does again smack to the downside, test the 2.163, and then downwards into the 2 level, break that zone, and then, as I've pointed out many times in the past, still looking for the 160s to occur. So looking at our monthly time frame view, it kind of makes it look a little bit easier to see, in my opinion. So this is where we're at. We're looking at indecision. We had, an upside push here into the 250 level earlier this month, and again put in those lows just last week, as somebody that actually subscribed to the channel had noted. Right after I put out my video, the market opened up that day, I think that's Sunday, and then it ended up already hitting my initial target on the lows here, pretty much on the nose. So again, I do expect to see this to be kind of volatile in here, but then ultimately looking at the retest of 2.16, which is last week's opening, break that low, then we are headed for the 2.03 retest, and then ultimately continue our downward demise into the 165 level, as I've been continuing to preach for quite some time now. So where's it going to go near term? Well, it's just really up to the market to decide. I wish I had a crystal ball to really be able to identify where it's going to stop at, but again, there is a potential for it to try to go up into the 240s here, around 244, 243. Do I give it a high probability? I'd say about 20% chance, but I am giving it that opportunity to do that. We do have a range here that we've been trying to hold above around at 2.27, just offhand, where we've been trying to hold on to this level here. Bounced up again, as you can see, off that level, which is basically the opening high candle here on our daily time frame of last Sunday, where we tried to hold above that range, had it gyrating a little bit in there. So as long as it continues to stay outside of that, there's a potential for the bulls to try to come in, cause a short squeeze, lure in the bulls, and then we'll start seeing another retest of that range between the 2.27 level, let's say, and down to 2.16. So once we get back within this range in general, that's where you're going to start seeing the selling pressure start ramping up, and then a break of that 2.16 clearly leads you back to retest the 2.03 level that we had put in back in August, and then beyond that we'll be in some trouble. But I do expect a double bottom bounce here around the 2.03, maybe up and around a 2.16 level again, and 2 as high as 2.21. Again, this is a wild pony. It does get very, very jagged as breakdowns and breakouts start to occur. There's a lot of fake outs with natural gas, as a lot of you that trade natural gas are well aware of. So make sure you are paying attention to the critical levels, not necessarily trying to play the more questionable. So what I'm saying is, as a trader, you should always be zeroing in on the most probable, high probability situations and setups versus trying to play the 60-40 to 50-50 type setups that aren't necessarily as clear. So in order to alleviate pain on your account and not get stopped out all the time, make sure that you play the higher probabilities. So what I'm saying here is, if you're going to be playing natural gas, allow it to do what it's going to do. Wait for the confirmation, just like with any other trade, and then enter in. So as far as I'm concerned, my personal way of handling natural gas right now would be to just let it do its thing and confirm whether it's going to go to the upside, retest the range, and then if it starts dancing within the range, wait for it to either break back out to the upside of the range or break to the downside of the range for the retest of the 2.03. Just the way I'm looking at it, do as you like. Just word of caution, make sure you're always using your stop loss, whether it be for natural gas or anything else that you're trading, just to make sure that you have proper risk management in place, good risk reward ratios already identified before you take the trade. Have a wonderful and green trading week. I will put out another update next weekend.